Hi, and welcome back to the Food Fund, where we analyze investing in food stocks. If you love food and love buying food stocks, beverage stocks, and restaurant stocks, you will love this channel. In this video we will be analyzing if Boston Beer Company stock is a buy. Boston Beer, stock ticker symbol SOM, is just one of many companies we explore on this channel. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Boston Beer Company. Boston Beer was founded in 1984. The Boston Beer Company, headquartered in Boston, Massachusetts, boasts a rich history as a pioneer in the craft beer movement. Led by Jim Koch, the company set out to challenge the dominance of mass-produced lagers with its flavorful and innovative brews. With an iconic brand portfolio including Samuel Adams Boston Lager, Angry Orchard Hard Cider, and Truly Hard Seltzer, Boston Beer catered to a wide range of palates. After going public in 1995 and acquiring the popular Truly Hard Seltzer brand in 2020, the company continued to grow. Today, the Boston Beer Company employs over 2,000 individuals, all dedicated to brewing quality beverages and fostering a vibrant craft beer culture. Now let's look at the price action. Starting with the 1-year chart, we see that Boston Beer had a CAGR of about 5%. Zooming out to the 5-year chart, we see that Boston Beer had a CAGR of 6%. Boston Beer share price has been a steady climber over time. If we perform a backtest comparison of investing $10,000 in Boston Beer versus the S&P 500, we find some interesting results. In that comparison with the S&P 500, $10,000 invested in Boston Beer would have grown to $14,502 or an 8% CAGR versus $20,979 or an 16% CAGR if invested in the S&P 500. This demonstrates underperformance for Boston Beer. A Boston Beer investment would have also been more volatile with a 48% standard deviation versus 18% for the S&P 500. Boston Beer outperformed the S&P 500 in terms of the best year performance, for which Boston Beer grew 163% versus S&P 500 31%, but underperformed the worst year performance where Boston Beer fell 49% versus the S&P 500 18% fall. In terms of max drawdown, Boston Beer fell 75%, more than 3 times the max drawdown of 24% for the S&P 500. Boston Beer did underperform the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. The share price pop from 2020 to 2021 reflects a time when stimulus check rained from the Treasury. Now let's hop over to market share and take a look at Boston Beer's market share. In this newest version of market share, we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under beverage and see that Boston Beer is categorized as an alcoholic beverage. Expanding the alcoholic beverage tab, we can see that Boston Beer has a small market share but is growing. Let's look closer at the year-by-year changes in market share. So we come over here and type in the ticker symbol for Boston Beer and see that the market share is 0.2% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Boston Beer is small but has been growing. The 5-year market share CAGR for Boston Beer is 5.7%. If we start in 2019, we see that the market share was 0.17%, 0.23% in 2020 and 2021. 0.21% in 2022, and 0.2% over the trailing 12 months. Unfortunately, since the spike in 2020 and 2021, Boston Beer has been losing market share. Let's take a look at the fundamentals. Gross margin is 42%. This is similar with other alcohol companies. Revenue has compounded at around 17% over the past 5 years and has reached over $2.06 billion most recently. A lot of people love Sam Adams. Looking at cash flow, we see a 5% CAGR over the last 5 years for operating cash flow, while capex has worsened at a 5% CAGR. As a result, free cash flow has grown at a 5% CAGR. Interestingly, operating cash flow fell dramatically in 2021 but has been increasing since then. Weighted average shares outstanding have increased over the last 5 years, going from 11.7 million shares in 2018 to 12.3 million shares most recently. Boston Beer has been diluting shareholders. However, since 2022 the company has been buying back shares. Given the free cash flow rebound and healthy margins, I would expect the share buybacks to continue. Now let's view return on invested capital. Return on invested capital has fallen from 21.7% in 2018 to 9.4% in 2023. This is not good. Boston Beer has become less efficient in driving profits from its investments, though this trend bottomed in 2022 and has been improving so far. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 27 days in 2018 to 26 days most recently, Boston Beer has gotten slightly more efficient over time. During 2020 and 2021 the company improved a lot, but the change was not sustainable. Now, let's look at the debt for Boston Beer. The net debt to EBITDA has decreased over the past 5 years, going from -0.6 in 2018 to -1.2 most recently. Given that Boston Beer is a profitable company, the negative value means that Boston Beer has more cash than debt. The fundamentals of Boston Beer are okay, not horrible but not great. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Boston Beer. It is a beverage company with a gross margin of 42%. The 5-year revenue per share CAGR is 15% and the 5-year free cash flow per share CAGR is 4%. This is okay. Decent revenue and free cash flow growth coupled with a good gross margin. A return on invested capital of 9% is low, but this value does seem to have started to grow. Next, the cash conversion cycle of 26 days is not terrible, but I would much prefer this value to be negative. Concerning debt, a net debt to EBITDA of -1.2 means that Boston Beer has more cash than debt. So from a fundamental standpoint, Boston Beer is decent. Now let's switch our attention over to valuation. Boston Beer is overvalued relative to the S&P 500 with a ratio of 1.9. The price to earnings growth, or PEG ratio, is 2, indicating that Boston Beer is overvalued relative to their projected earnings growth. Boston Beer has had good revenue growth over the past 5 years. However, its market share peaked in 2021 and has been declining since. The beer business is a competitive one with many different consumer options. Furthermore, consumers seem to have drifted towards spirits and wine consumption and away from beer consumption. This statistic chart shows beer sales declining from 55.5% in 2000 to 41.9% of alcohol sales in 2022. After growing market share for over 2 decades, spirits finally overtook beer as the best-selling alcoholic beverage in 2022. Globally, consumers have moved to a more sober lifestyle, hurting all alcohol producers. Sales of non-alcoholic beer have nearly doubled in the last 5 years. The implications of these trends are not good for beer producers, and I don't expect the trends to change anytime soon. While Boston Beer is a decent beer producer, macro trends clearly argue against taking a position. I think there are better beverage companies in the market and find nothing unique about Boston Beer when compared with the other beer producers. For me, Boston Beer is not going on the watch list. Many thanks for watching. What do you think about Boston Beer and the decline of beer drinkers globally? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.